Hello, it's Craig Larson at Larson Financial Advisors on January 8th, 2019. Back by popular demand, the Market Minute videos. Sorry for the long delay, but I couldn't think of a better time to restart these videos than now, given the horrible volatility in the markets in the fourth quarter of 2018. So we'll start with a couple of data points. Number one is that December 2018 was actually the worst December in the stock market, going all the way back to 1931. So you got to go back to the Great Depression to find a December that was that bad. And number two, 2018 as a calendar year had the highest number of asset classes that had negative performance. So there was very little that was working well in 2018. And quite frankly, most things didn't really start coming apart at the seams until fourth quarter. Now, when I get better with these video editing softwares, I'll show you more charts. But for now, let me verbally describe what happened. We hit a peak in the S&P 500 index in late September, and then there was a little bit of a breakdown and then sort of a range of consolidation. And the market came down to 2625 on S&P 500 and bounced back, came back down and hit it and bounced back, bounced off that level 3-4 times, and then it broke down in mid-December. And after that point, there was an about 11% free fall in stocks before they stopped falling. Now, we've had a pretty good last week or so, and now the market is within about 2% of coming back up to that line. So typically what we find in markets, when there's strong support like that and then it's broken, when the market comes back up, this will be resistance. So expect the market to be challenged a little bit at this level. In order for us to contemplate that the trend has changed back to positive, we like to see the stock market decisively break above that 2625 level. If we see it struggle and then roll over and start to turn down and lose momentum again, that's very negative, very bearish. The other thing that we'd like to see from a chart standpoint is that right now, on relative strength measurements, in the short term at least, money market funds are out arm wrestling stock funds, okay? And what we want to see is the stock funds start to win some of those battles and be out arm wrestling money market before we can assume that this damage is over. And typically when you see a 20% downturn in stocks, there's a high percentage that could be just the first leg down of a multi-leg longer term downtrend. So you got to be very careful here. When you get 10-12% drops that are sharp, usually those are just corrections, but a 20% drop is much more serious. So I'm going to be watching that very closely. We'll probably get more information about this range test at 2625 in the next couple of weeks. And I get a lot of questions about, well, what's the cause of all this, right? Well, there's a number of factors that are going on in markets right now. Number one, there's still a lot of tariff concerns. Number two, there's Brexit. Number three, the European banks, the big banks, are very weak, okay? And then interest rates have been rising in 2018. At the same time, there's something called quantitative tapering going on. Well, what the heck is quantitative tapering? Well, you might remember after the big decline in 2008, the central banks and the governments of the world collectively stimulated the economy with something called quantitative easing, just pumping money into the system, okay? Now that's being unwound, okay? And so what used to be a tailwind for the stock market and the economy is now a headwind. So those are other things to watch. Quick note on these videos, these are for educational purposes. They're not a specific buy or sell recommendation for anybody. If you've got questions about your specific portfolio, please give us a call or an email here. We'd be glad to help. And if you like the videos and want to make sure that you're getting the notifications on a timely basis, on the lower right of your screen down here is a little red subscribe button on YouTube. Just click on subscribe and then make sure that you've told YouTube to give you the notifications so that you can stay up to date. Thank you for tuning in. I appreciate you all out there. Have a great day.